Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Tuesday, August 7th, 2007. The market's closed and the S&P 500 gained 1.1% with its $1.64 gain. And we saw that yesterday the market recaptured that 200-day moving average, and today it stayed above it and also got back above the 10-day moving average. It is important, though, to notice that the 10-day, 20-day, and 50-day moving average are all declining right now. So we've still got a pretty damaged market in here, and any rally like this one should be treated with a little bit of suspicion. Now, when we look at a 10-minute time frame, you do see that the market is looking a lot better on the intraday time frame. And as I like to say, the short-term time frame or the long-term time frame is nothing more than the sum of a bunch of these short-term time frames. So the short-term time frame typically leads the longer-term time frame. Now, what we saw in here today was kind of the outline that I was looking for yesterday, and that was I thought the market ought to rally up towards about 148, and what I was looking for was hopefully a pullback down towards 145, 145 and a half. Now, after the Fed announcement, we had a pullback, and it came down to 145.60 and then rallied strongly from there. Notice also that that area is now the location of what looks like it's actually rising, and that is the 5-day moving average. So now we've got this struggle here over the last 6 or 7 sessions where the market has just kind of gone sideways, but with a downward bias. And we saw yesterday that it came up to this trend line of the last 6 or 7 days or so, and that's where it broke out. Also, you could make a case that that downtrend line might have acted as a reason for people to buy in there. But I think it's important to see that we've got the 5-day moving average starting to advance. Now, that tells us intermediate term that things are looking better, but it doesn't mean go out and buy everything, because we've still got a very damaged market here in the daily time frame. So hopefully you were alert and saw that initial weakness after the Federal Reserve. It came down to the level that I was hoping to see a pullback to. And then, like I said yesterday, hopefully this can lead to a rally of a couple days, maybe up towards the 150 level. Now, a couple days, we'll see, but 150 is very close by here now. I mean, we're at, we saw a high in here today, just about 149 or so. And we've got that, what I targeted is the declining 20-day moving average as a potential resistance level. So let's just give the benefit of the doubt to the buyers in the short term, but you have to remain very defensive because there's still all these macro problems with the market fundamentally that aren't going to be seen in this chart, but still something to be aware of in the background as far as it is likely to continue to keep volatility high, so you have to remain very defensive in this environment. But so far, the market is doing what you might expect it to do, and it's also doing what you might expect it to do, which is after a large decline, we typically see lighter volume on these rallies. Now, that lighter volume means that the buyer's conviction isn't quite as strong as the conviction of the sellers on the way down. Therefore, it leaves the market in a vulnerable position to further decline. So we could even take a look at, since this level right here, since the market really broke down, let's take a look at what the average price has been. That might even be a good target if we take a look at this breakdown level right here and go straight across with a VWAP line. And you can see now that the buyers are seemingly gaining control because it's back above that level at about 147 or so. So since this decline right here is where I'm marking it from, the buyers have net been in control in here. You can make a case for an inverted head and shoulders pattern. I'm sure some people will point that out. But let's just take it slow in here because, again, we've got a very damaged daily chart. And you just have to remain cautious until we get more evidence that the buyers are going to regain control, or are we entering a bear market? And I'm not ready to make any type of calls about that so far. One troubling area for the market was the semiconductors. These were down a penny today, and this is the high-tech area. Typically, it's going to lead the technology area and the rest of the market, but the Qs still managed to come up with a gain in spite of the weakness in the semiconductors. But it's looking like the semiconductors, again, the level I pointed out that it needed to clear was 38, and you can see here on the intraday time frame, they came almost right up to that level. We've still got a declining 5-day moving average, so maybe now we're going to start to see a little bit of stabilization right in here, and that 5-day moving average can flatten out, and then it breaks past 38. That would be a very positive sign for the rest of the market as well. Breaking back below $37 from here, though, would be very troublesome and could signal bigger problems for the rest of the market. Again, defense is what you have to really focus on in this environment because it's going to continue to remain very volatile. Look at this daily chart of this IWM. It just looks terrible still. Now, yesterday I pointed out this longer-term trend line that it seems to have hit intraday and also found some support at the prior annual lows or lows for this year near that 75 level. So that seems to be holding. We're still below a 200-day moving average. We've got a steeply declining 10, 20, and 50-day moving average saying on this daily time frame, sellers are clearly in control and that any rally in here should be treated as a bounce within what's a primary downtrend now. So still highly damaged, but if we look at the encouraging signs here, the encouraging signs are that it got back above that 5-day moving average, but that 5-day moving average is still declining. What I wanted to see was a rally and then maybe a pullback towards 76.50. I still think a pullback towards that 76.50 would be healthy for this market. And then really we can say that the buyers have gained control of the intermediate term time frame above this level, 78.20. So it's still in the healing process. It is encouraging to see that it did clear back above this level I pointed out yesterday near 76 that had been the prior support, and yesterday closed just below that. Now it tested that level intraday and closed above it, but still only aggressive traders ought to be involved in this market because it's very deeply damaged right now. The Qs, finally, we'll take a look at the Nasdaq 100. And again, I pointed out yesterday, we've got a rising 50-day moving average. So generally speaking, this is the most bullish of the indices that we're looking at here. But it's still been damaged as well. So it is back above that 50-day moving average. It's been kind of toying back and forth with that. Seems to have closed below the 10-day moving average. We don't really want to place too much emphasis on that, though. The level I pointed out yesterday was 48.45. It got above there intraday and then came back down. So I think a little bit more backing and filling in here. Maybe it's then going to be able to be in a position to sustain a little bit more of a rally up towards that 49.5, 49, even that, maybe even that neckline from that pattern that we were talking about a couple weeks ago. That was about 49.65. But still, the burden of proof, I think, remains on the buyers in the intermediate term here. This low is going to be very important going forward, so keep an eye on 47.50 as support. And let's take a look at a shorter time frame. You can see that once it cleared that level, the buyers took control, but they weren't able to maintain that control. Volume increased in this area, so there's really no way of saying who had the upper edge there. I guess you could say the buyers, because based on price only, it did move above this 48.10 level or so and stay above it, but it continues to be pretty choppy action. I'll also point out in here the lower volume in the Nasdaq 100. So that tells us that you can't be too trusting of this price action, but price is the only thing that pays, not volume.